Assalamu alaikum and hello everybody. This is Zishan Hassan, a tutor of Advanced Audit Assurance. So, firstly, here is my WhatsApp number. If you guys have any query, any question, you can ask me anytime. And before examination, one of the important document to understand is the examiner's report, and I have this recent examination report of advanced audit assurance, which you should know that what others did wrong, which caused them a paper, which caused them a failure, so that you don't repeat. So let's dive in and do it. Look at the examination report. So first of all, it's a format of the exam. So we all know about the format of the question, exam format. Okay, now we have the section A question, and it is, it is for the format of the question. It is 1st July. You are the manager in the audit of uh, Turrington and Co, a firm of chartered certified accountants, and you are responsible for the audit of Speedy Style Co, an unlisted family owned company and existing client of your firm. The company has a financial year ending 30th September, and you are about to start planning the year's audit. The question was a typical Section A question set at the planning stage of the audit. Okay, Speedy Style and listed company which specialize in online fashion sales. Risk faced by the company, evaluation and prioritization of the significant risk of material misstatement, that is ROMM. Okay, so suitable data analytics procedures which should be used in the audit of Speedy Style company, inventory, and finally a discussion of the ethical and professional issues arising from the professional made by the company finance director. The section A question is typically where candidates perform best, and the recent trend for more focused answers continued this session. It is pleasing to see that many candidates appear to have taken note of the guidance provided by the examination team in this area. Thumbs up. Okay, the company in the scenario was an unlisted which operated as an online retailer in the fashion industry with a presence in 12 countries and was an existing client in the firm. The company was managed by the member of the same family and had limited, uh, you know, governance structure in the place, and was planning to expand into future homeware sales through the acquisition of an existing brand. So, here, see, candidates should note that they are not expected to have the detailed industry specific knowledge. Answering question in this examination and the scenario will always have enough information to enable sufficient specific risk to be identified and evaluated to achieve full marks. Okay, so we have several exhibits. This is nothing unusual. The partners in which email in which we get the requirements as well. Then we have the background information about the client, focusing on the current operation, future strategy of the business. Then we have some financial information, selected financial information extracted from the Speedy Style company. Then meeting notes information from a meeting between the finance director Kendall Headed and Giselle Moose, the audit engagement partner. So in this question, candidates were given specific directions in partner email to use for each requirement, and it was pleasing to know that in the majority of the cases, these instructions were followed. As always, candidates are encouraged to spend adequate time reading, planning, should obtain a holistic view and understanding of the issues present in the question before completing their answer. Where there is evidence of candidates taking this time and planning their answer, responses tend to be more structured and focused, which generally increase the chances of candidates scoring strong technical as well as professional skill marks. Now, so we here is the exhibit 1, the partner's email, as you can see, right? using only exhibit 2 and 3. Evaluate the significant business risk facing by the company, 10 marks available. Okay, using only exhibit 2 and 3, evaluate the prioritize significant risk of material misstatement to be considered in planning the audit for the financial year ending 30th September X5. Okay, then using profit before tax as your benchmark, you will need to determine and apply an uh, appropriate materiality, 16 marks. Okay, in section C you are requested to prepare information describing examples of data analytics procedures which would be beneficial in the audit of inventory for the speedy style companies, 6 marks. Using exhibit 4, discuss the ethical and professional issues arising from the finance director's proposal, 8 marks available. So nothing specific, they're just telling about the requirements in this para. Now, so ROMM's present in exhibit 2 and 3 requirement ask candidates to describe examples of data analytics procedures which should be used to audit inventory. Finally, a requirement D ask candidate to discuss the ethical and professional issues arising from the finance director responses. So as far as the general comments, let us ignore the general comments as we don't get anything about the students mistakes in here. Well prepared candidates scored good marks on this question, particularly when focusing on the specific scenario. Tailored in the scenario, focus on the requirement, high technical and professional skill marks were obtained. Okay, some candidates continue to produce very vague answers which were not tailored to the scenario and therefore did not achieve high technical or professional skill marks. These are the students who, you know, didn't connect with scenario. Okay, um so you know, requirement A, 10 marks. Using exhibit 2 and 3, evaluate significant business risks facing by the company, 10 marks. So in this question, candidates were required to use the specific information provided in the scenario to evaluate business risk facing by the company in triple exam and in line with identifying and assessing the risk of material misstatement. Evaluation of business risk should include those risks which would have a significant impact on the client business and where there is significant probability of this occurring after mitigation stated in the information. So this required was generally well answered. Cool. With many candidates able to identify and evaluate the risk around the company explained into the area, mainly homeware, the issue arising to the lack of knowledge and experience in this area. Strong answers were also able to discuss the company's current success may not be the replicate in this new aspect of the business. The best answers were able to also discuss the additional cost which might incur due to homeware products. Okay. Now, okay. Strong candidates also connected this point on the additional risk regarding the means of expansion, pricing being indicators of brand that was already losing customers and telling strategically sound decision. Even without making these connections, many candidates were able to score credit from discussing the risk attached to buying the care brand. Okay, most answers identify the risk associated with the distribution issues following the large amount of inventory owned by the company being delayed due to the becoming stuck in transit. Many answers were able to discuss that value of the inventory was significantly reduced as a result of the delay due to the fast moving and seasonal nature of the industry. Okay, now surprisingly, many answers overlook the business risk associated with the company's governance structure or any provided generic observations, such as the company has no audit committee. The scenario stated that the company was seeking a stock market listing in the near future, and therefore the current governance structure would hinder the directors' ambitions to list. Few candidates were able to discuss the lack of commercial or financial experience of the current board of directors and the implications this could have on the strategic decision making and internal control. Okay. In previous sessions, the main restrictions on the marks being awarded continues to be that in some cases risks are not well explained. For example, many candidates only the company supplies based in Farland. Most candidates fail to explain exactly how might have an impact on the reputation of the company. Does not fully explain the risk. It is important to also clearly state the implication for the company, the association, therefore, also a loss of sales and profits our customers may choose to buy from elsewhere. The fact that the Farland company, Duff company, exclusively supplied to Speedy Style company, exertion risk as it could suggest that they are aware of these practices to produce could be more widespread. An answer which should cover all these points would also to maximize their marks. Some candidates misread the information and assume that the factory belongs to Speedy Tile Company and therefore discuss the risk of fines and penalties. Unfortunately, as a result, many candidates also try to turn this into a ROMM, suggesting that a provision was needed in the financial statement of Speedy Style Company, missing that this would not be Speedy Style Company's liability. Candidates must ensure they fully evaluate the risk and its impact to the maximize their technical and professional marks. Some candidates continue to mix up business risk and ROMM in an answer which is very murdered or cannot score any credit as it is explained from the wrong perspective. Disappointingly, some answers to this requirement focus on either risk mitigation auditors responses which are not requested and therefore were unable to score marks. Candidates are not required to prioritize the business risk. This requirement relates to the evaluation of ROMM, and candidates should not waste time providing this additional information. Candidates are again reminded to read the requirement carefully to ensure they have concluded adequate question, practice to ensure they understand what is required, and have developed appropriate exam technique. So, overall, mostly students did well. Then, requirement B 16 marks. Using exhibit 2 and 3 again, evaluate, prioritize the significant risk of material misstatement to be considered in planning the audit for financial year ending 30th September X5, using profit before tax as your benchmark. So, this requirement is typical in volume and nature to many planning questions and examines a major area of the syllabus. Evaluating of the risk of material misstatement, candidates were directed to use exhibit 2 and 3 only to evaluate and prioritize the ROMM relevant to the audit. So there were 16 technical marks available in this part of the question in addition to a significant number of professional skills. It was disappointing to see that there were candidates are still obtaining a few marks for this type of requirement as they continue to reply or generic explanations. That means not connecting to the scenario. That's a sin, guys, which fail to refer to the information in the scenario. Candidates who refer to the specific information provide more in-depth answers and are also able to assess the scale of the risk in context of the specific audit client. Now, materiality. Specific marks were available in this requirement for the calculation and application of materiality in line with the syllabus guidance, while a significant number of candidates appeared prepared and followed the materiality guidance provided by the examination team. A significant number continue to fail to apply guidance and loss out on evaluate technical and professional skill marks. As a result, candidates are expected to initially determine a materiality threshold to the audit as would be required in practice. 3 technical marks are available for the materiality determination. Candidates see 3 marks for simple materiality calculation and determination. Okay, so candidates are expected to demonstrate a knowledge of the appropriate percentage range for the benchmark as instructed by the audit engagement partner. In this question, profit before tax was to be utilized with the candidates expected to use somewhere between 5 and 10% as their range. Calculate the monetary amount in the respect of the range. Candidates must then use their professional judgment to select an appropriate materiality threshold given the risk levels which in the audit, and provide a brief justification for their choice. Each of these steps examines a different aspect of the understanding and skills required of an auditor. So, generally, materiality was not well applied. Many candidates ignored the guidance in the partner's email, use a different benchmark, produce the wrong calculation. Some candidates wasting time by doing all the calculations correctly, but they failed to apply their own materiality threshold throughout their answer and reverted to doing calculations for each item based on total assets or revenue or both. This resulted in many candidates wasting valuable time, failing to score the professional skill marks attached to this area. It was also disappointing to note that some candidates failed to justify a materiality threshold for the audit. The examination team will give credit for any reasonable explanation of the chosen materiality threshold. The mark is to reward candidates who can justify their response through the application of professional judgment. It is not required that candidates select the identical percentage or figure, or that they provide a justification identical to that shown in the model answer. However, simply stating that materiality has been set at a specific value due to this risk which have been identified or because the audit is high risk is not considered a suitable explanation by examination team and will not be awarded credit. Converting setting materiality at the upper end or the simply because the company was an existing client does not give adequate consideration to risk profile of the audit in the current year. Many candidates use the types of comments as their explanation and therefore were not able to score the full technical marks in this area. So, it continues to be disappointing to note that some candidates still do not understand the relationship between audit risk and materiality. As seen in the previous session, some candidates concluded that there was a high level of risk present within the audit, the materiality level could be increased, thus failing to understand that there is an inverse relationship between risk and materiality level which should be set. Understanding this relationship is a basic principle assumed knowledge. Candidates are encouraged to revisit the principles of materiality which were explored in audit and assurance AA. Shame on you guys if you did so. Anyways, evaluation of the risk using Exhibit 2 and 3, candidates were required to evaluate and prioritize significant risk of material misstatement in planning the audit. In any effective risk evaluation, candidates need to demonstrate an understanding of risk. However, it arises how the audit will focus on those issues likely to cause a material misstatement. Candidates who demonstrate a depth of evaluation were awarded for more credit than those providing more generic performance on this requirement was generally satisfactory. Majority of candidates were able to effectively evaluate the ROMM associated with the evaluation of inventory, specifically in relation to the risk of obsolescence due to the nature of the industry. They also identified that the items affected by the distribution issue may now have to be sold at a lower prices, resulting in the risk that the cost was now in excess of the net realizable value. Better answers also challenged the optimistic view of the finance director. These items did not need to be written down, showing appropriate professional skepticism. Many answers also made a connection to the risk of management bias to try and maximize profits ahead of the potential listing. Some candidates incorrectly focus on the point at which inventory should be recorded in the company's records, suggesting that there was a significant cut-off issue due to much of the company's inventory coming from Farland. However, the information in the scenario made it very clear that the company took ownership of the inventory item at the point of dispatch, that is, once it leaves the supplier's factory. Therefore, given the established nature of the process, this was not considered to be a significant risk. Okay, many candidates were also able to identify the issues relating to the possible impairment of the homeware which had just been purchased due to the suggested that the brand was overpriced. Many candidates show appropriate knowledge, understanding IS 36, deemed to have an life should be tested for impairment annually, even without an indicator of impairment. As a result, a proportion of candidates were able to challenge the lack of impairment review being conducted by management, conclude that there was a significant risk carrying amount of the company's board brands were overstated. Okay, now okay, appropriate level of professional skepticism to the accounting treatment adopted by the management. Only the strongest answers, however, discuss whether the use of an indefinite life or brand names were appropriate, and were few candidates were able to discuss the requirement of IS 38. Okay, the risk arising in relation to the level of returns from customer was less tackled. Most answers were able to demonstrate knowledge of the adjustment to the made to the company financial statement as a result of possible returns. Okay, however, many candidates discuss this being the requirement of provision in the line. Okay, instead, this would be governed by the requirement of IFRS 15 customers contract revenue from contract with customers company to estimate the expected level of returns and to reduce revenue which is recognized accordingly. So, in IFRS 15, refund liability to be recognized also be the subsequent impact of the inventory. Revenue recognition is a key area of financial reporting. Candidates are reminded they should ensure they have sufficient knowledge, understanding of this fundamental accounting standard. Despite weak knowledge of the accounting treatment, a high proportion of answers will still be able to successfully demonstrate professional skepticism by challenging the suggested reduction of the refund liability from 50 to 40%. The best answer also went on the provide some numerical analysis to try and qualify the impact of the potentially incorrect estimate. Now, few answers adequately consider the impact of the current corporate governance structure on the level of risk, while candidates were able to connect the potential for the management bias to the possible future listing. Only strong answers question the impact of the current structure of the level of the control risk within the company, the lack of audit committee and non-executive directors, amount of scrutiny challenge which is applied to company control and financial reporting processes, thereby the overall risk of material misstatement. That means you guys are becoming pro, mostly people are becoming pro in this part of the question. Now the prioritization, high prioritization proportion answers fail to provide any indication of how the risks were prioritized, therefore failing to follow a key instruction in the partner's email lost out on valuable professional marks. As a result, candidates can demonstrate their prioritization in a variety of ways, including providing some justification as to why a risk is prioritized throughout their answer, or in a conclusion provided somewhere in their answer. To score these marks, candidates must do more than simply say this risk are priority, as they are material. Only risk of material misstatement are relevant anyway, and therefore candidates must demonstrate additional reasoning as to why specific risks are more important. Candidates are encouraged to review the model answers to gain understanding of what is expected in relation to the requirement. Requirement C. Now, as you can say, during the meeting we discussed increased use of audit data analytics provide, including more efficient effective audit to enhance the quality. Following the discussion, I have identified the speedy style company inventory would be an area which would benefit from the use of the audit data and audit data analytics, particularly when auditing their complex inventory system. You are required to prepare information describing the examples of data analytics which should be beneficial in the audit of inventory for speedy style company. 6 marks. Requirement C is typically of a section A question and required candidates to suggest audit procedures to address a specific area of risk arising in this question. In this question, the requirement was slightly different, that it is asked candidates to specifically consider data analytics procedures which should be suitable to test inventory. So answers were mixed. Candidates are reminded that data analytics is simply a tool which can be used by the auditor to develop more effective and efficient audit responses. Data analytics allows the auditor to do more testing, cover more of a population. It does not fundamentally challenge the aim of the production or the objectives of the auditor. Therefore, candidates should have tackled this requirement similar to any other request for audit procedures. The first step is always identify the key risks which arise in relation to the area being tested. For inventory, the main area of the consideration will always whether inventory is being held in line with IS2 inventories at the lower of cost and NRV. As such, this should be a key focus for candidates when designing necessary procedures. Okay, candidates who were able to step back consider this first and the nature of the method for carrying out the procedure. Second, candidate credit was also awarded where candidates came up with suitable procedures focusing on other assertions including the volume of inventory. See how generous he is. Held for using data analytics, assist in sample selection for the physical verification for test controls. Some answers suggested using data analytics carry out walkthrough tests on the inventory system, which was not awarded credit. A walkthrough test is a method by which the auditor ensures their understanding of the system. It is not a suitable procedure for gathering evidence, where candidates made it clear that they were using the data analytics tool to run data through the system to verify the accuracy of the controls or the method by which inventory was valued. Credit was awarded. So, the weakest answers made no attempt to provide procedures which were suitable to the performed using data analytics. Some candidates focus on reviewing board minutes for the discussion of the delayed inventory or obtaining management requirements, representations, confirmation that inventory was held at lower of cost or NRV. Some answers also provided activities which were more business focused, such as data analytics to the identify the best selling items to which needed to restock by the company. Okay, now strongest candidates gain a professional marks under data analytics evaluation for designing procedures which address the area of judgment risk involved in the accounting for inventory, tailoring their answers to then acknowledge the partner's request for those two suitable data analytics procedures. 8 marks for the last requirement. Discuss the ethical and professional issues arising from the finance director's proposal. Required the candidates discuss the ethical and professional issues arising from a request for the additional services provided by the finance director. So, detail the request relating to the possible secondment of the partner of the firm as a non-executive director for 6-month period and a request to assist the company in recruiting more NADs. The information also included in an offer to the audit team of a 50% discount on the company's products as an acknowledgement that the audit team had been in place for 7 years. The UK and IRL version of the exam also contain an additional request to assist the company with the review of the interim financial information which would be required following a successful listing. So the response to this requirements were mixed. Better answers were able to correctly identify, fully explain the self-review threat arising from a partner of the audit firm becoming a non-executive director of the company. Most candidates were able to identify the ISBA code of ethics for professional accountants. Okay, so it states that a partner or the employee of the audit firm cannot serve as a director of the officer of an audit client. Therefore, conclude this request cannot be actioned even for the limited time requested by the finance director. Most candidates were also able to identify the risk of assuming management responsibilities in relation to the partner joined as an NAD in providing assistance recruiting additional NADs. Now, this is the INT and Singapore version of the exam. Candidates are also available for discussing that the assistance could be provided in relation to the equipment of NADs, such as reviewing the qualification of candidates, of advising competencies and candidates in relation to their financial reporting skills, in relation to possible self-interest threat, these marks were not available in the UK and IRL version. Okay, so not discussing it. The offer of a 50% discount to the audit team and the length of the service of the audit team were generally tackled in all versions of the exam. Majority of the candidates able to identify self-interest, familiarity threats in relation to the discount. Large minority of candidates identified the self-interest threat but were not able to fully explain the implication of the threat. At AAA level, in order to score the technical marks, it is not sufficient only demonstrate knowledge of the threats. They must be appropriately applied and explained in the context of the scenario. There is also a key professional skill. The audit engagement partner for whom the briefing notes were being prepared will not need to be educated on what a self-interest threat is, for example, but will not to know what this threat specifically arises in the circumstances presented. Candidates therefore reminded that to score full marks in relation to the ethical issues may do more than simply state its self-interest threat. They must gain explain the implication of the threat. In this instance, the self-interest threat may result in audit team being reluctant to the issues or challenging management for their losing the engagement. Many candidates were able to go on to the discuss guidance around accepting gifts in terms of only they are trivial or inconsistent. Only better answers, however, tend to conclude 50% discount is unlikely to be considered insignificant and therefore the offer of the discount should be declined. So, in terms of the length of the service of the audit team, weaker answers got mixed up between the requirements for listed versus unlisted clients, suggesting that the firm was in breach of the 7 years INTSGP 5 years rotation requirement for listed companies and that the team must be replaced immediately. Only the better answers were able to make the distinction that this requirement could become relevant in the near future due to the company's intention to list. Nonetheless, credit was still awarded to candidates who suggested that the rotation of the audit partner or team was still a valid safeguard which should be recommended in these circumstances. As mentioned above, in the UK and IR version, there was an additional requirement regarding the audit firm providing consistent with review of the company's interim. So we are not discussing it now. Okay. Overall, in addition to the professional skill marks described within the different sections of the question, 4 marks are available for communication. Overall, these marks were awarded for the use of a report header, introduction, presentation, relevance of the answer. This session, it was disappointing to see a number of candidates did not present their answer in a suitable format and therefore were not able to score all the communication marks. So, section B, Gerda Company. Gerda Company was a 25-mark question focused on evaluating the matters to be considered by the audit firm. You are an audit engagement partner, a global firm of chartered certified accountants. You are responsible for the audit, an existing client and large multinational retailer which is listed on the stock exchange. The group has recently acquired a financial service of finance company in the country of Ireland. The board of directors are enthusiastic about the acquisition as they believe it will help encourage group expensive retail product which have been harder to sell in the last 6 months of due to the economic pressure and new market. There are 2 exhibits, an email to the group audit partner Maggie Lake from the group finance director regarding the upcoming audit for the year. File notes of the outside audit work provides details of the audit matter which have been brought to your attention by the audit supervisor. So overall candidate performance in this question was mixed. Okay. Answer to the requirement were generally more structured and detailed, whereas answer to requirement B were often only a couple of short paragraphs of bullet points, and some candidates failed to consider the detailed information in any depth, providing a list of generic comments which were often irrelevant to the scenario. As such, many candidates were also unable to demonstrate the professional skills. Examine the question now. So, using Exhibit 1, evaluate the matters which should be considered by the ISO and Co in determining whether to continue act as audit of the Grada Co. 10 marks. Candidates to evaluate the matters to consider when determining to continue to act as a group auditor for the GADA group. Although this question was set in the context of an existing client, the requirement should have been very familiar to candidate as to acceptance and continuance of the engagement is common topic at AAA. Candidates were directed to use Exhibit 1 only, and it was pleasing to see that majority of the answer reflected this guidance. Answer to these questions were generally satisfactory, with many candidates evaluating sufficient number of areas to pass this requirement. Most answers were able to confidentially evaluate the impact the acquisition on the subsidiary had on the overall risk, okay, as well as the level of work which would be required on new subsidiary. A good number of candidates also commented on how the nature of the new acquisition financial service had a significant impact on the profit of the engagement, demonstrating appropriate analysis and evaluation skills. It was pleasing to see that high proportion of answers were tackled some of the specific group aspects of this question by discussing the additional consideration the group auditor would need to make due to the inclusion of the component auditor. Many answers were able to discuss the need to assess the competence and independence of the component auditor, as well as how much reliance could be placed on their work. Only better answers took this a step further to discuss the risk that the new subsidiary may use different regulations or accounting standards, and the group accounting policies need to reflect upon consolidation. Most discussed most answers discuss the concerns caused by the appointment of the new chief CEO, specifically in relation to the possible impact of the integrity or the ethical values of the client due to CEO's previous issues with business failure and non-compliance with the regulations. Many candidates also demonstrated appropriate commercial acumen by questioning the impact on the firm's reputation by being associated with a company which has appointed as a CEO with a history of such regulatory breaches. Now, few answers raised concerns over the client's integrity regarding the firm not being notified about such a significant change during the year. However, many answers commented on the fact that the group may be try to aggressively keep the fee for the audit as low as possible, and that intimidation threat may arise as a result. Similar to common on the section A question above, many candidates were able to identify intimidation threat but were not able to explain it enough to gain full mark. Now, the very strongest answers were able to comment on the possible limitation on the scope of the audit, which was being imposed by the management following the finance director's comment that no extra audit work or fee was anticipated following the acquisition in the year. Candidates who discussed the need for the fee to increase to components for the additional risk and work which was not needed, including the possible need for the auditor's experience with financial services companies, were awarded professional skills marks for demonstrating commercial acumen. Next, following detailed consideration, ISO and code determined it was appropriate to continue with the audit of the group. It is now September 25. Audit work of GADA group has been completed using Exhibit 2. Discuss the matters which in respect of the GADA group should have been considered the audit committee in contributing to the audit quality. So requirement B was less well attempted, and it was disappointing to note that some candidates failed to adhere to the clear guidance through the question that the answer should be provided from the perspective of the group audit committee and that the focus was on audit quality. Candidates were directed to Exhibit 2, and there were 4 key issues for consideration. So, candidates who had strong knowledge of FRC audit quality This paragraph is not related to international version. Most candidates provide reasonable assurance to the issues arising from the legal claim and previous year's report to the management. In terms of the legal claim, many answers discuss that it was the audit committee's responsibility to ensure the audit team had full access to the group staff and records and the restriction to the necessary information. Documents may be because a previous was required, which the finance director did not want to include in the financial statement. Strong answers also discuss how it was the audit committee's responsibility to monitor management response to auditor and assist the audit team in their change of challenge of management. So, in terms of the answers provided in the relation to the issues arising in the previous year's report to the management, many candidates discussed that the report should have been reviewed and responded to management and the audit committee, and the recommendation should have been action better. Answers were also able to sensibly comment on the risk that while no breaches were identified in the current year, the existing weakness in controls may give rise to issue in the future. Again, only the strongest answers then related this back to the effect on the audit quality and the audit committee by discussing that this represented a breakdown in the audit process and a demonstration that the audit committee was not effectively discharging their responsibilities around the group's system of internal control. With regard to the communication, with the audit committee, many answers correctly identified and discussed the communication between the auditor and the audit committee should be regular and open. A number of answers also discussed that the audit committee should have reviewed and respond to the suggested audit plan, particularly to the highlight and omission of the acquisition and the cryptocurrency. Better answers also commented that the lack of communication from the audit committee severely undermined audit quality. As a result, the issue raised in relation to the accounting treatment of the crypto coin held by the group new financial services company were less well tackled. The question scenario uh, provided guidance on the accepted accounting treatment for such assets that they should be held as intangible assets. This guidance was there to help candidate focus their answer point around a more complex and niche area of accounting. Unfortunately, number of candidates ignored this information, wasted time discussing a variety of other often inappropriate accounting treatments. Very few candidates were able to discuss this issue from the perspective of the audit committee or audit quality. Only the strongest answer discuss the role of the audit committee in looking for and supporting the auditor in their challenge of management. Candidates who focus on the challenging why the finance director may have wanted to record the assets as such in order to improve the group's liquidity demonstrated. So, appropriate professional skepticisms and were awarded related technical and professional skill marks. Some candidate wasting time providing detailed answer points around the possible misstatements and might be present in the financial statement. As a result of these issues impact on the auditor report, the considerations were beyond the scope of the requirement and therefore were not awarded credit. Candidates are once again reminded to read the question carefully to ensure they are answering the requirements as it is set. So, last question, and here it is. Two exhibits, audit files providing details of audit completion matters which have been brought to your attention. Draft auditor's report, extract from the auditor's report to Wolves Company for the year ended 31st March 2005. So, here it is. Evaluate the audit evidence which has been gathered in relation to the content of the integrated annual report and the acquisition of the new brand, including where additional skepticism should be demonstrated, and discuss any additional audit evidence which is needed. 12 marks. Okay, so requirement A, ask candidates to evaluate audit evidence which had been gathered in relation to the integrated strategic report and the acquisition of the new brand, and discuss where additional evidence was needed. Candidates were specifically directed to consider where additional skepticism should have been applied. Okay, answer to this requirement were generally satisfactory, with many able to cover a sufficient number of points across the issue in the integrated report and the brand acquisition. It was pleasing to see that significant number of candidates were able to discuss the requirements of ISA 720. Okay, the majority of the answers discuss the auditor's responsibilities in relation to the other information, looking for evidence. Okay, the majority of the answers also identified an inconsistency in relation to the comment in the integrated strategic report. In fact, decreased by 20%. Some candidates did misinterpret the information, assume that the discrepancy in revenue stated in the integrated report mean that revenue had not been audited at all. It should have been clear from the timing of the scenario and the specific wording in the requirement. It was not the case, but it did result in some candidates wasting time on detailed revenue procedures which were not required. Few answers challenged to commentary around the retendering for a large contract. Okay, inappropriate for the directors to comment with certainty that they will win a contract they have not yet tendered for, to claim they are the market leader without some corroboratory evidence. Only a minority of answers consider the impact on company of the loss of the contracted if it gave rise to a material uncertainty overgoing concern. Many answers did go on the suggest that the additional evidence was required in relation to the revenue statement requested should be made for the management amendment, the integrated strategic report. It was disappointing to see that very few answers suggest an additional evidence which was needed around the contract, with such as correspondence with the customer for evidence that the company was likely to win the contract, on the discussion with management about the process and why they are confident in winning the contract again. In terms of now, so in terms of the brand acquisition, it was pleasing to see that many candidates demonstrated professional skepticism by challenging management assertion that no impairment of the brand was required and questioning an evidence which had been collected in relation to the brand. Stronger answers also challenged whether management had deliberately failed to recognize an impairment on the brand to ensure that and financial statements present a more favorable outlook to the bank for the purpose of their lending decision. Many answers discuss the need to obtain updated forecasts following the decision by the regulator. The company's advertising campaign being misleading. Obtaining a read-only copy of the forecast constituted insufficient audit evidence. Strong answers also displayed appropriate accounting knowledge by asserting that the result of the regulatory investigation was likely to constitute an indicator of impairment. Therefore, the requirement of IF 36 should be applied to assess the brand's carrying amount against its recoverable amount. So, completion update. It is now 1st August X5. During the audit, the audit team concluded that the disclosure of a material uncertainty relating to Wolves Company ability to continue as going concern for the foreseeable future in respect of the contract has been adequately disclosed in the draft financial statements. The directors have now amended the concerns regarding the integrated annual report, and further audit procedures have been carried out on the internal forecast spreadsheet. The audit team concluded that the CamMax brand is impaired by the 125,000. However, directors disagree that the brand is impaired and have decided not to recognize the impairment loss. Using the information in the completion update, Exhibit 2 critically appraised the extract from the draft auditor's report for the year ended 31st March. Requirement B is a common requirement, okay, in the completion and reporting question, but it is an area candidate finds more difficult. Answer to this style of question requirement continue to be disappointing, although answer this session were of a higher standard than in previous sessions. So he's disappointing but appreciating as well. Actually, not he, she. Triple A examiner is a female, Anne Iron, a nice lady. Okay, so candidates were moved from forward in time and provided with an update in relation to the possible off of the contract, the other issue in the integrated strategic report, and the impairment of the brand. Candidates were then asked to critique and extract from the draft auditor's report. As in previous sittings, candidates often waste time critiquing what they perceive to be missing from the report, even though requirement is clear it is an extract. Based on the information provided, many candidates were able to identify the use of an adverse opinion was inappropriate in the circumstances described, but only strong answers could clearly explain why and display appropriate knowledge that the financial statement did not include misstatement which would be considered pervasive. Although many candidates were then able to suggest that a qualified opinion would be more appropriate, again, many failed to assess the misstatement in the sufficient detail to explain why. High proportion of answers discussed that it was inappropriate for the opinion and basis for opinion paragraphs to be combined, and went on to discuss the necessary titles placement of each paragraph. However, it was disappointing that most candidates missed out on relatively easy marks by failing to identify that the opinion paragraph did not provide any details of the financial statement which had been audited. There was no reference to the applicable financial reporting framework or the accounting period which the opinion related to. So, comments in relation to the use of the emphasis of matter paragraph were disappointing, and some candidates demonstrated weak knowledge in relation to the circumstances and requirements of using material uncertainty related to going concern MURGC section or emphasis of matter paragraph. Auditors report limited their technical marks as a result. Only the best answers scored the marks, discussing the content which would need to be included in the MURGC section and including reference to the disclosure note, and that audit opinion is not modified in respect of this matter. In this session, it was pleasing to see fewer instances of candidates simply going through all the different areas of auditor reporting that they can think of and try to apply it to the question, such as the need to include key audit matters, other matters, paragraph. However, some candidates did waste time discussing the circumstances when each audit opinion would be relevant. Okay, candidates should also ensure that they review the model answers to understand the level of depth and analysis which is needed to score the technical and professional marks in the relation to the audit reporting. So overall, the performance of candidates in this question is broadly in line with the past sessions. There continue to be a gap between candidates capable of demonstration audit competence through strong application of knowledge and concepts to practical scenarios, and those who approach the examination as a factual exercise and fail to tailor their answers to the scenarios or do not show professional skepticism or commercial awareness. Many candidates also continue to show a lack of what should be assumed knowledge for materiality, ethics, and auditor reporting, and continue to produce answers of a standard below what is expected at AAA level. Practice of past questions will aid candidates in determining their knowledge gaps and give practice at applying the knowledge to the given scenario. It is essential that candidates analyze their answers in comparison to the scenario specific explanations given in the model answers to understand the level of analysis which is needed in the AAA exam. This question practice needs to also to be based on good knowledge of the syllabus and built upon both the applied skills level, financial reporting examination, and strategic business reporting syllabus. Candidates are encouraged to ensure their assumed knowledge in the both areas is at an appropriate level before commencing their studies towards AAA exam. Candidates are encouraged to develop a wider appreciation of the significance of risk by reviewing published auditors' reports of listed companies where the auditor produces a key audit matter section. This will allow candidates to see the real world explanation by auditors of why something was a specific risk to a specific client. There are also a significant number of accessible resources available which can help candidates put their studies at AAA into a more context both on the ACCA website and also for the example through the IASB, which has a wide range of resources including many current issues such as those around the proposed new sustainability standards. These resources can help candidates better understand some of the practical challenges auditors face. The examination team also uses a list of examiner documents to try and highlight to candidates the resources which are being produced, which may be beneficial to look at in more detail in order to supplement their studies. For example, the IASB, blah blah blah. So, this is the overall discussion by the examiner in the examiner report, and I hope this will help you in your upcoming examination. So far, so good. Take care and good luck.